Time now is 7:29. Stocks drop to open the day as markets are concerned about the coronavirus.
Joining us right on the phone, Fox 5 financial analyst Chase Wilsey. Chase, good morning.
Good morning. Thanks for having me.
Okay, what in the world's going on? There's a lot of fears worldwide, but for the Dow to drop almost 1,000 points right out of the gate, what's going on?
Yeah, well, right now, you've seen the market. It's just been kind of priced for perfection. You've seen a forward PE multiple, which is kind of looking at how much you're paying for the earnings of the market. It's above 20 times. The long-term average is about 16.2. So you're kind of, again, looking for a perfect case scenario. Well, now we're seeing the coronavirus is starting to last a little bit longer than I think many people anticipated, just kind of sending some shock waves, and that's what's kind of pressuring the market, I'd say.
What would trigger something like this, Chase, in layman's term, for people who may not be involved in all the numbers and understand in detail what these numbers mean? We've been talking about the coronavirus now for a few weeks. Why today? Why on this Monday?
Well, the way I see it is, you're going to have different stories that come out that are going to send the market lower. It's just part of investing. One thing that I look at is, if you go back 40 years, the average intra-year drop on the S&P 500, the broader base market, it's about 13.8%. So this morning you're seeing things down about 2.5%. It wouldn't surprise me to see a correction. And a correction is defined as a 10% drop, and oftentimes those come with, different scares, and the coronavirus is definitely a minor scare at this time, at least in the short term.
Most financial analysts stress, hey, this is a long haul. It's the long run that matters here. But then when you see the coronavirus spreading in Italy and South Korea, we heard Italy is the 8th biggest economy. South Korea is the 12th biggest economy. When you have that much money at stake, this is when you see those fears take effect. And when you see it, maybe it creates like a bit of a domino effect. Everybody else starts selling off.
Yeah, absolutely. And I think the big thing that you kind of pointed to, Earl, is you got to look at the long term here. You look, 3, 4, 5 years down the road. Warren Buffett was on CNBC this morning and said, yeah, it softened the economy a little bit more than many people anticipated. But, your businesses are still going to be doing just fine in a few years down the road. I know the SARS epidemic was another case that scared people. If you look 12 months down the line after SARS had ended, the S&P 500 was up 20.76%. So again, stocks are going to move up and down in the short term, but think about the long-term impact on business. Short term, it's going to hurt supply chains. It's going to soften demand a little bit, but that demand, it'll come back online, and there's not much to worry about in the long term if you consider what's happening with this coronavirus.
That's exactly, Chase, what I wanted to ask you. As people are waking up and they see these numbers, you see a negative 845 in the markets, one would think, oh my goodness, what's going on? But I think that what we're hearing from you, the takeaway is you kind of got to hang on to the ups and downs of the market, correct?
Yeah, you got to understand what you own in the portfolio again. If you had a food-making company, let's say you have a technology company, what is that business doing? Is it going to be around in the next 3 years? Yeah, most of them aren't going to go out of business because of the coronavirus. It's going to create some short-term, negativity in the stock price, but it's not going to jeopardize the long-term performance of the business.
All right, Chase Wilsey, we thank you for the time on what's going to be a very busy day for you, obviously, so thank you.
Thank you.
Time up now.